we're talking about Bitcoin today. So I got into Bitcoin when it went from 20, and then I'm basically watch a trading formula. When it dropped down to, I think, 7, and I moved back up. I said, like, I'm back in. So I'm back in at 9. So when somebody says, what do you think about Bitcoin? I said, I'm very happy. And they said, what if it comes back down? I said, then I'll buy more.
That's a good answer. That's a really good answer.
Yeah, but I don't really know much about it. So when I was listening to you speak on whose program it was, your depth of knowledge on why Bitcoin is the money, is the future of money. Would you mind going into that? Because I'm just a guy who likes to make money, but I don't understand Bitcoin.
Sure. And I think first off, I need to say it's way bigger than money for me. What I did after the book, I was looking at these two forces, and everything I said in the book is absolute facts. We have technology that's making things cheaper, and we have a system that's trying to make things more expensive. Right. And so what I was looking for is a solution, any solution. Could the existing system change itself to provide abundance to humanity? Or would this existing system fail through war, revolution, everything else like it has done in the past? And I looked, and I wanted to actually find a solution out of the existing system. But what I realized is system changes, why Kodak doesn't change themselves, why Blockbuster doesn't change themselves. There's too much inertia in the system. And so out of everything that I found, then I found and I was already in Bitcoin, but I became all in. No, I don't know, saying all in, it's not all my wealth, but I thought this is going to be the best thing to be able to transition humanity from one system to another system. And the new system would be a way better upgrade for humanity. It would be beneficial for everybody.
So why is that? Why is that? What do you see as a technology guy?
There's a lot of pieces to this question to do in a quick. Exactly. A lot of pieces to this question. But first, the scarcity. So you either have abundance in money and scarcity in everything else, where you have scarcity in money and abundance and everything else. We are moving to a more and more digital world where prices should come down as things become information. That means that you either have two choices. If you run an inflationary system, which you create more money out of nothing against that system,
which is going on with the Fed and the Treasury and the
exactly. That's the world we live in today.
Right.
Then what you do is you concentrate all power in government. Unilateral. It just keeps on moving. 26% of GDP today is government spending, and it has to structurally get more and more and more. You centralize all control in government, and proven throughout history, if you centralize all control in government, it looks really bad for the humans.
Communism.
Exactly.
Look, if you look at the recent price drawdown, like you just described, right? So in 2017, we went from $1,000 to $20,000. It took about a year to draw down to 3,200. That was the bottom of this past bear market.
Oh, don't make me feel terrible.
And so from 3,200, basically between 2019, 2020, and into 2021, it then peaked again over 60,000, and then recently fell again to somewhere between 28,000 and 30,000 was kind of the most recent low. And I think to your point, people see this high degree of volatility that scares the hell out of them. But one of the beauties of Bitcoin being this decentralized digital open system is that you can actually go look on the blockchain and you can see exactly who's buying and who's selling, right? It's an open, transparent ledger. And so when you go and you look at those on-chain metrics or on the blockchain, what you find is that entire drop from 60 down to 30, it was all new investors, new people in the market, right? And you can tell that by how long have they been holding on to the Bitcoin that they were selling. And so when you see that all the new people are selling, you'd ask yourself, well, who's buying it? It's all the people who've been around for a really long time. Right? They're saying, hey, if you just got here and all of a sudden a little bit of volatility spooks you, I'll surely buy up your Bitcoin at a lower price. Right? And so what you have is you just have weak hands selling to strong hands, or kind of new people selling to old people. And so the people who've been around a long time, this is nothing new to them.
Going into 2031, which, as we left off earlier, I would expect the U.S. money supply to expand from 20 trillion-ish today to about 500 trillion in the next 10 years. I expect global M2 to expand roughly 12x from around 100 trillion to about 1,250 trillion, 1.25 quadrillion. And the difference there is that a lot of the weaker international currencies will have collapsed into the dollar. So the dollar will actually have grown in purchasing power overall. And I think by this time, so going into 2031, let's say, that Bitcoin will have continued its growth trajectory. It will have played out another one of these price cycles. Possibly its price cycle will have broken and it just gone into a long, slow grind upwards as people realize it's a game of accumulation. And I think Bitcoin by this time will have reached about 20% of global purchasing power. So this would imply Bitcoin's market cap in 2031 dollars to be about $250 trillion. So that's about 1/5 of global M2 stored in Bitcoin. Now, accounting for inflation, that means Bitcoin's market cap in today's dollars would be about 20 trillion. So in 2031 dollars, and this is a very bright line to distinguish, I think Bitcoin by the year 2031 will be north of $12.5 million per Bitcoin.
Jesus.
But
$12.5 million per coin?
$12.5 million, but adjusting for inflation, it will only feel like north of $1 million per Bitcoin in 2021 dollars, because the dollar will have lost so much of its value by then. $12.5 million will spend like $1 million.
The Internal Revenue Service is aware that virtual currency, see, you Bitcoin guys, you got a target on your back now. They know you got some money and they want it.
Well, they say a couple of things that I think is really important. First of all, that any time you use or trade your virtual currency, that's a taxable transaction. So, I mean, let's give an example. Let's say that Bitcoin became a normal trade. You go buy groceries. When you bought groceries with Bitcoin, that would be taxable because it would be considered a trade for Bitcoin for US dollars. So every time you spend Bitcoin, every time you sell Bitcoin, all of that is taxable. And here's the thing. So on your tax return now, there is a box you have to check to say, did you trade Bitcoin? Well, that means, did you do anything other than just buy it? Okay, if you bought it, you don't have to mark that box. But any other use of it, you have to mark that box. If you don't mark that box, Robert, it's a felony. This is not a civil penalty. Most things on a tax return are just civil penalties, right? They're just, okay, I paid the penalty, get my wrist slapped, and I go on my way. Not with this one. This is a felony. They will come after you if you don't mark that. And in fact, you should have marked it.
Trust me, they are coming after, us, because I've done very well with Bitcoin and Ethereum. But Tom knows my tax strategy. I buy, but I never sell. And if I paid somebody in Bitcoin, what would happen then, Tom?
That would be taxable. So if you paid him,
the person I pay,
it'd be taxable both for you and for the person you pay. That's right.
So as long as I'm buying my Bitcoin after I've paid all the taxes, which I don't pay anyway, and I store the Bitcoin into my asset column and it sits there, it's like my gold and silver, right? As long as I'm not using it, it's not taxable.
It's actually just like the gold and silver. So the same thing would happen if you went and used silver or silver or gold to buy something. That would be a taxable transaction too. So it's very similar to gold and silver. The one difference is that if you hold Bitcoin for over a year, you do get capital gains rates. So you get to tax that at 15% or 20% instead of ordinary income. Gold and silver have a different tax rate than that. So that's the one primary difference between the two.
What is this thing called DeFi?
So DeFi is short for decentralized finance. Basically, it's mimicking real life financial services on blockchain. And with Bitcoin, the main mimic of financial service there is just currency, right? It's a currency and it can be traded. Now with 2020, basically the decentralized finance focused on borrowing and lending first, so people could deposit money for interest rates and borrow for and paying an interest rate on top. And also we talked about the automated market makers, which was the liquidity, so people can trade stuff as well. Now, what we're seeing in 2021 are these new developments of other financial services. So you're starting to see like options trading, you're seeing insurance, you're seeing hedging, you even see hedge funds. Like you're in finance, that ecosystem is really covering a lot of the different ideas in finance. And basically all these things are being developed and represented on chain. So these are all financial services, decentralized on blockchain that you can use if you have a wallet. That's it.
All I understand about blockchain, it's more secure and more transparent and less manipulable than what JP Morgan and Goldman Sachs were doing. Is that your understanding too?
Yeah, I think if we take a step back, blockchain again is just nobody owns the infrastructure. There's no central bank, there's no country. A bunch of different servers are out there running at the same time, and they all own the same code, the same chain, the same history. So it's almost impossible to come in and then break the system or develop a new code that like catastrophically ruins the whole ecosystem. So what that means is you can build new apps on it, you can build new services, and there are malicious services on there for sure. But overall, things that work, the things that are verified, become adopted, and you have this like kind of world computer where everybody can go in and create their own app that everyone could use. And again, it moves fast because something works or something works better. Everyone migrates to that. Everyone uses that service instead.
You know, there's 21 million Bitcoin. Is it theoretically possible that could be the money for the rest of the world? Can it keep expanding out? I mean, I know that thing called Satoshis, but I don't know what they are. But can they keep dividing?
Yes, well, it divides down to 8 decimal places. And the 8th decimal place is a Satoshi. So it's divisible, which means that it's expandable. So, you know, you could theoretically get to 1 Satoshi equaling $1. I mean, that's a huge number. The reality is we talked about before about this network effects with this, but it also applies for institutional money managers and corporate treasurers, because if they have it on their balance sheet, they're outperforming everybody else. So it encourages other people to get involved because they need to catch up. Then the market cap goes up. So it goes from 350 billion to $1 trillion. Now, at $1 trillion, it means BlackRock can get involved. So they get involved and the market cap goes up to $2 trillion. And that brings in the sovereign wealth funds and it goes up to $5 trillion. And as it broadens out in its number of users, the volatility comes down and it becomes a more usable form of money. Right now, it's basically a store of value plus a call option on the future of financial technology, which is why we've got such this racy trajectory that it has. Eventually, that trajectory will flatten out and will look much more like gold, which is a stable store of value. But right now, we're at the exciting...